All right, so you're ready to get past the intro stuff and dive into how traders really look at the Forex market, right? Well, you are in exactly the right place. Today, we're going to break down the three essential types of market analysis. Let's just jump right in. Look, you've probably learned all the history, how the market works, what moves the prices, blah, blah, blah. And I totally get it. At some point, you just think, okay, this is getting boring. Can somebody please show me how to make money already? We hear you loud and clear. And you know what? That's where your real journey as a trader actually starts. So right now, you are standing at a crossroads. Just like this. It's that classic choice, isn't it? Red pill or green pill? And believe me, what you decide right here, right now, is going to set the whole tone for your trading journey. So what's it going to be? You can take the red pill, and hey, no hard feelings. You go back to your old life, forget any of this ever happened. Or you can take the green pill, and we can show you just how deep the rabbit hole of Forex analysis really goes. Excellent choice. The fact that you're still with me means you chose the green pill. So welcome. Welcome to your first day at the School of Pipsology. Okay, first up is probably the one you've heard the most about, technical analysis. This is all about what is happening right there on the price charts. At its heart, technical analysis is really just the study of price movement. The big idea here is that all the news, all the economic data, all the emotions, it's already baked right into the price you see on the screen. So the theory goes, if you study the history, the patterns, you can find clues about where the price might be headed next. So what's in a technical analyst's toolbox? Well, they use things you can literally see on the chart. Stuff like trend lines to map out the direction, or moving averages to kind of smooth everything out. But the goal is always the same. Use these visual clues to try and pinpoint the best places to get in and out of a trade. But here's the thing. Charts only tell part of the story. For the rest of it, we've got to look beyond the squiggly lines and into the real world. And that brings us to our second type, fundamental analysis. Fundamental analysis is all about the why. Why did the market just do that? Instead of just looking at charts, you're digging into the economic, the social, and the political forces that are actually driving the value of a currency up or down. Yeah, we're talking about the big stuff here, the big picture things that can move entire economies. Think about interest rate decisions from central banks, reports on how a country's economy is growing, or, major geopolitical events. This whole method is about understanding those powerful, underlying currents in the market. And that brings us to our third and final piece of the puzzle, sentiment analysis. Now this one is all about the human element. It's about the psychology of the market. Sentiment analysis is basically trying to answer the question, how is everyone feeling right now? Is the market super optimistic and bullish, expecting prices to just keep going up? Or is everyone pessimistic and bearish, thinking it's all about to crash? It's all about trying to get a read on the overall mood of all the traders out there. And by understanding that collective feeling, you can actually find a real edge. A lot of traders use sentiment as a contrarian indicator. For example, if absolutely everyone is bullish and convinced the price is going to the moon, well, that might be a sign that a reversal is coming. I mean, think about it. If everyone has already bought, who's left to keep pushing the price up? So, there we have it, our three types of analysis: technical, fundamental, and sentiment. But listen, the real secret to successful trading isn't about picking your favorite one. No, it's about combining all of them. Think of it like this. I want you to picture your market analysis as a three-legged stool. You've got one leg for your technical analysis, one leg for your fundamental analysis, and one leg for sentiment. Now, to be stable, to be successful, you need all three of those legs to be strong and balanced. Because if you're only looking at charts and you totally ignore a huge announcement from a central bank, well, your fundamental leg is weak. And what happens? The stool breaks and you fall flat on your face. And that risk is there if you neglect any one of the three legs. But wait a second, there's a little problem with this metaphor, isn't there? A stool is just a thing, it's passive. And trading is all about thinking and analyzing. So our stool is missing a really key component, a brain. And you know what? It actually needs more than just one brain. To truly get a handle on the market, you need to develop three different ways of thinking, one for each type of analysis. And that brings us to our final and honestly most important lesson. This is the mindset, the mental model you've got to build if you want to become a consistently successful trader. There we go. This is the goal. This is what you're shooting for. You need to have 3 distinct brains when you approach the market. One that's thinking about the technicals, one that's thinking about the fundamentals, and one that's thinking about sentiment. And they all have to work together, in harmony. And let's be crystal clear about what's at stake here. The source material puts it perfectly. If your analysis on any of these 3 types is weak, or you just decide to ignore one, there is a very good chance it will cause you to lose on your trade. You just can't be a one-trick pony in this game. So look, if you take only one thing away from this whole explainer, please let it be this. There is no best type of analysis. The whole debate over which one is better, it's a complete waste of time. True mastery comes from putting all 3 together into one solid view of the market. So we'll leave you with this question to think about. Which leg of your own analysis stool needs the most work? Being honest with yourself about that, well, that's the first real step. Thanks for joining us.